Hi there, good afternoon. My name is Steve O'Hara. I'm the founder and CEO of Optibiotix, and I'm here today to talk to you about the promise of the human microbiome. And this is a really exciting area and seen by many as the future of healthcare. So it's an area that hopefully be of interest to you. And my company, Optibiotix, is involved in modifying the human microbiome. And in doing so, it helps prevent and manage a whole range of human diseases. So that's the a normal disclaimer. So if you go to a little bit on the human microbiome to give you a bit of background. So the human microbiome is quite simply the microbes in your gut and on your skin. Now, if you look at the picture in front of you, you can see on the bottom left-hand side of the slide, you can see a tower block, and this represents the number of cells in the human body. Now, the top part of that tower block in black represents the number of human cells. And the bottom part in grey represents the number of microbial cells. So you can immediately see there's a lot more microbial cells than human cells, about 10 times as many. You then go to where her left hand, where the schematic's left hand is, there's a big sphere there. In the center of that sphere, there's a little dot, a little red dot. That's the number of human genes. And the big sphere itself is the number of microbial genes. Now, why is this important? Is because genes produce proteins, and those proteins produce enzymes and produce hormones, and they control the body's physiology, biochemistry, and metabolism. So you can quite clearly see just from this diagram that there's a big impact because the microbes have far more cells and far more genes. So they have a big impact in terms of how the body works. And this is how they impact upon human disease. You then go to the very right-hand side of the slide as you face it. You can see this is an interesting area scientifically and in terms of investment. So you can see over the last 20 years or so, there's been a big increase in the number of publications on the microbiome as people investigated it and found that it has a bigger impact in all sorts of diseases, everything ranging from cancer to Parkinson's to autism, right the way down to obesity and diabetes. And the bottom part of that slide is the number of investments. So you can see that's increasing year on year. In 2017 was just I think that was 3/4 of the year that was taken through. So lots of investment in this particular space, particularly in the therapeutics area of the microbiome. So really seen as an opportunity for the future. Now, investors or customers don't really invest in the science. What they invest in is a problem and a solution to a problem. This slide here shows the problem. So on the left-hand side of the slide, as you face it, you've got the number of deaths by cause worldwide. It's broken down to 3 areas. At the bottom, there's injuries, which have remained fairly static. In the middle, there's the non-communicable diseases. So these are diseases not caused by infections, for example, and they've increased since the 1990s, year on year. Then you've got the communicable diseases, which have decreased. So you can see a lot more of deaths are caused by the non-communicable diseases. If you then move to the right-hand side of that slide, you can see a breakdown of these diseases in terms of number of deaths worldwide. And you can see one of the biggest problems is cardiovascular disease, causing almost twice the number of deaths as the second biggest problem, which is respiratory diseases. You can also see within there, diabetes is also a major problem. Now, obesity isn't in here, and overweight, because they're contributing causes of death as opposed to cause of death. But they are have a significant impact upon all these areas. So what we have some really interesting science, and we have some really big global problems that need to be addressed and could possibly be addressed by this science of the microbiome. And we'll come on to how Optibiotix as the company does that. So if I give you a very quick snapshot of the company. So as a company, we're developing patented and trademarked ingredients and final products which address chronic lifestyle diseases. So those are those big problems that I mentioned earlier: obesity, diabetes, and cardiovascular health. And in essence, we have at this moment in time 2 products, our first generation products. One is a probiotic called LPLDL, and the other is an ingredient called Slimbiome. So LP-LDL is a probiotic that reduces cholesterol, so impacts upon cardiovascular health. Slimbiome is an ingredient that impacts upon cravings and hunger, so it helps to reduce the impact of obesity and overweight. And we sell these as the tell inside a wide range of food, beverage, supplement, and increasingly medical products around the world. So just in terms of what the company is formed, I formed it in 2012. I did a listing onto AIM in 2014 via a reverse takeover. In total, we raised 8.3 million. The important point here is that the market cap of the company is between 50 and 60 million. So you can see that, unlike many AIM companies, we raised not a great deal of money, but more importantly, we gain value from that money. So we've increased our market capitalization. It's greater than the amount of money we raised. So we created value. And if I go to the third bullet point, which talks through the funds, so this is taken from our H1, so our first half of 2020, which was completed at the end of June. We have about £1.68 million worth of cash. Our cash burn is about 100k per month, sometimes slightly over, sometimes slightly less. And our first half revenue growth was just under £750,000. And so we're growing quite quickly because the previous year, at the same period, it was £1,480,000. So we had a 5 times increase in revenues. We compare this year, H1 to H1 last year. And that's really important because as well as increasing our sales, we've also reduced our costs. And that's important because if you scale a business up, the last thing you want to be doing is increasing your sales at the same time increasing your costs. That's something you have to watch out in companies. And you'll see this is very much a scalable model. So as you increase sales, your costs reduce. And a scalable business model is something that certainly institutional investors look for very much so, because it creates opportunities further down the line, because it creates for value enhancement. And just to give you a bit more detail behind that, we have what we describe as a partner model. So rather than sell products ourselves or manufacture products ourselves or create formulations, we actually work with partners to carry it out for us. This takes longer, but it creates more value, as I'll show later. And so what we try to do is build multiple partners across the world in all areas of the value chain. So the value chain is a manufacturer, a formulator, and a distributor. So thinking about if you're trying to create a car, you need someone to create the components, someone to put together those components, and someone to sell the car. Okay, that's what we're trying to do here: create a manufacturer of the ingredient, and someone to formulate the ingredient into tablets, into sachets, or into capsules, or into other products like shakes or bars, and someone to sell those via distributors. And we've had really strong deal flow. So over the last couple of years, we built up an awful lot of partner agreements, over 78. You can see over that period from 2016 to 2020, we've had a big increase in deal flow. So in 2020, with 26 deals to date, that's more than all of 2019, and we're only into October. But even more importantly, in terms of deals, is that we've got a year-on-year acceleration in sales growth. So we look at H1 in 2018, 2019, 2020, and compare them to the previous H1. So in 2018, we had a 7.7% increase in sales growth from the year before. 2019 had an 84% increase on 2018. And in 2020, this year, we had a 400% increase in sales growth on 2019. So you can see the rate of increase of sales is increasing year on year. And now we only started commercializing our products about 2.5 years or so ago. We've now got products commercialized in over 120 countries. And increasingly, we've got our product commercialized with larger partners. So, for example, at the start of 2020, we launched products with Holland & Barrett. We also launched products with Alpha Sigma, which is a big Italian pharmaceutical company, 1.6 billion turnover. And in the US, Agripur, who are a big dairy company, I think their turnover is about $7 billion per year. So these are big companies. So we've got not just lots more deals, but bigger deals as we go forward. And our products are winning awards internationally. So our LPLDL probiotic is winning scientific awards, and our Slim Biome is winning industry awards. So when we launched it in the UK late in 2017, it won the award for best weight management ingredient for the UK. We then launched it in Europe in 2018 and won the award there. And just last year, we won the award for the best weight management ingredient in Asia. So some really good substantiation of our products. So it's not just the science, it's the products that people buy and industry supports that make a difference. So moving on, just a very quick overview of the company. In essence, we have two arms of the company, and I'll start from right and I'll move to left. The first arm is our prebiotic arm. So a prebiotic is an ingredient that you use to feed bacteria, okay? So you use it to change the microbiome. And our first generation product is Slim Biome, which I mentioned is a weight management product. Our second generation products are our sweet Biotix, which are sweet fibers, and our microbiome modulators. So we created the ability to precision engineer the microbiome by changing particular microbial groups in the gut. And that's an exciting opportunity as we go forward. Then if you move across to the next area, probiotic health, this is our probiotic area. So these are live organisms. And as I mentioned earlier, we have a strain called LPLDL, which is our own strain that we've developed. That had a number of human studies, 3 human studies, and we have that being sold around the world as our own brand or own level products for other companies. And that has full GRAS status and is produced to pharmaceutical standards, so it's GMP pharmaceutical production. And then finally, on the left-hand side, this is not part of the company, it's a separate entity. This is an investment opportunity. So I formed Biotix back in 2016. I think we invested around about £700,000 into that particular company. We put on the stock market a year later as Biotix Plc, and we own 30% of Biotix Plc. So actually just under 29.8%. That today is a market cap of just over 20 million. And that's a really great company headed by Stuart Ashman. So a separate company, but something that gives us a say in other areas of the microbiome, in this particular case, skin. So quite a broad area of science that we're covering, and a range of technologies that allow us to manipulate the microbiome by either adding feedstuffs for the microbes or microbes themselves. Then move to the next slide. I'm not going to go through this in bullet point by bullet point, but I just want to bring out 2 bullet points really. The first is that we built a very, very strong portfolio of IP. So currently we have over 70 patents, and our patents are what you call overlapping patents. So for each of our areas, we don't just have a single patent, we'll have maybe a composition patent, an application patent, and maybe a manufacturing patent. That allows us to really protect our area. So even if one patent is not granted or someone challenges it, we're protected in that particular area. Then we create what's called double IP, which is a combination of patents and trademarks. So the trademark gives you your brand, and the patent gives you your commercial protection. And together, it's very, very strong. This is a really valuable asset. Going down the slide, the very bottom, what I've tried to do is build these 2 separate entities, the probiotic side and the prebiotic side, and then bring in experienced commercial industry leaders. So as you build a company, I need to focus more on the corporate and the investment side, and I need to bring in specialized industry leaders who know about the industry far better than the board do. So I've brought in specialized industry leaders for each of those areas, and these guys have a track record. They've come in as VPs from various companies or senior managers within well-known companies, and they've got a track record of building sales and growing profitability. And they head each of those divisions, and their task is to take each of those divisions into profitable divisions. That's the probiotic and the prebiotic divisions. And that's what we're aiming for this year. So this is just a very quick overview of the product pipeline. Again, I'm not going to go to this in any great detail. I just want to take you to the left-hand side of the slide. Just highlight that we have 2 types of products. We have what we call our first generation products. So those are the fairly low development risk products, which we've launched already and on the market and selling well. So they're established products for established brands in in 160 countries around the world. So that's our first generation products. Then our second generation are just being commercialized now, which is our sweet Biotix, our base sweet fibers, and our microbiome modulators, and a whole range of other products that we got coming through. So in the investment community, you call this steak and sizzle. So the first generation product provides a stake, so they get you to a position where you are a sustainable business. And will get return for investors. Then you have the sizzle, which are coming through now, our second generation products. If I give you a bit more detail of our first generation products, and again, I break these down into Slim Biome and LPLDL. So Slim Biome, we sell it either as an own label brand. So our own label is called Go Figure. We have bars and shakes, we have porridges, we have muesli. And this really acts as a shop window for our partners to look at and then say, yeah, it looks pretty good. We know how to apply the Slim Biome to these various product areas. We've also created a medical device. This is very unusual for a weight management product called Slim Biomedical. That's really starting to get traction now. So we have retail, consumer, medical device. Then we have branded products. This is where a number of our customers want to use our ingredient and launch their own products. A good example of that is the Whole & Bad Slim Biome range that they launched earlier this year. They have 3 flavors of a shot of Slim Biome, which has been selling really, really well. If we go down to LPLDL, we have a portfolio of our own label products, which are part of the Core Biome range. We have Core Biome X3, which again is selling very, very well. We have Core Biome BP, which is focused more on a formulation for blood pressure. And later on this year, starting next year, we'll have a Core Biome V8, which is a vascular health product to help reduce the buildup of arterial issues and problems, and will help complete our portfolio. We also have an interest in pharma. Seed are one of our partners. They reported a week or two ago they've got an investigational new drug approval to incorporate LPLDL in a multi-probiotic offering for IBS. So that's again looking quite exciting. And we also have, as I mentioned earlier, a number of partners who sell their own brand products. And the best example is probably Alpha Sigma, who sell Sigma 3 to hospitals, GPs, and pharmacies across Italy. And Italy is the second largest probiotic market in the world and the biggest market in Europe. So you've got some great products and some big markets. I just want to go through the commercial strategy because I think sometimes this confuses people. So rather than just sell an ingredient or just sell a formulation, and what we try to do is create a commercial strategy where we get maximum value from the value chain. Remember, the value chain is creating the ingredient, creating a formulation in different presentations and tablets and sachets and capsules, bars and shakes, etc., and then selling it through distributors. And I'll just give an example here using the LPLDL. So we have a manufacturing agreement with a company called Sacco. So they produce the LPLDL, so they ferment it in big vats, they grow it up, they take the water off, they dry it off into cakes, and then they freeze dry it. Now they sell it themselves and they give us a profit share of those sales, or we buy it from them and sell it on ourselves as part of that particular process. When we sell it on ourselves, we'll sometimes sell it on to companies that will formulate a product. A good example would be Neutralinia, who formulate our Core Biome X3 and our Core Biome BP products. And then when they sell that on themselves, or they give us a royalty, or if we buy from them and sell on, we'll obviously get a sales from that particular product. And finally, we then work through retailers who, when they sell on the product, will often give us a royalty. So what you're just trying to do here, as I said earlier, extract maximum value from the value chain and control that value chain, and not just sell an ingredient. So moving on, this just gives you an idea what's happened over the last 4 years or so. So we started commercializing in 2017. 2016 just had a development deal. And you can see that in the earlier years, we had manufacturers, we had formulators, and then we had the odd distributor. So just to be clear, going back to our metaphor in terms of the car industry, you can't sell a car until you've got someone making the components. And that person making the components sells to somebody who puts those components into a car and constructs it. And then sells it to a distributor who then sells it on. So in the same way, until we complete that value chain of manufacturers, formulators, and distributors, our sales don't build up. But you can see now, over 2018, 2019, 2020, we started to complete that value chain across the whole of the world. So these in different territories, typically in the UK, first of all, Europe, and then the US and Asia, although we went to Asia slightly earlier than normal. So you can see now in 2020, the vast proportion of our deals are with distributors. So they will then complete the value chain, and that will lead to this sort of sales growth that we saw in the first half of the year. And this just proves that point, really, that if you look at the green graph is the sales, and the red line is the costs. And what you're looking for is, and the point in 2020 is just the first half of the year, so up to June. But the key point here is what you can see is that as we're increasing the sales, our costs are decreasing, because a bit like building a house, you invest in building a house in terms of building the infrastructure. So in our particular case, we invested in the clinical studies, which are very expensive. We invested in the scientific studies. We invested in the IP. And then you get to a point where most of your science is complete. Then you invest in sales. So the further you go forward, the less you invest in R&D. You still invest in it, but less you invest in R&D, and more you invest in sales growth. So that's what you're seeing here as we go into 2020. A decrease in sales and a decrease in costs and an increase in sales. 2019 was quite an unusual year. We spent an awful lot of money in terms of achieving GMP manufacture and grass. It was also unusual. We changed our end of year, so it was a 13-month period. But you can see that in 2020, we've got that crossover point where our sales are equal to our costs over the first half of the year. That's an exciting point to be as a company. Just to go through some of our products in a little bit more detail, just to give you a flavour for what we're selling, because that's what people are buying. So SlimBiome, as I mentioned earlier, won lots of awards. We've got a number of studies, one from Oxford University and one from Roehampton University. And these all show the same thing, that as a product, it was designed to reduce hunger and decrease cravings for sweet and savoury foods. The whole idea behind this is that we can all lose weight if we take in less calories. If we take in less calories, we feel hungry. If we feel hungry, we tend to snack or eat food. But if we can reduce our cravings for sweet and savoury foods and our hunger, then we can sustain our calorie restriction for longer. And that's certainly the case. So what we're finding consistently is that we get a reduction in hunger, we get a reduction in cravings, and more importantly, we get a reduction in weight. And that seems to be around the hip and the waist. So it's not water, it is fat that's being reduced. And also we get some really positive change to the gut microbiome. And probably even more importantly that, and it's all very well doing human studies and showing that the product works, but does it work in the field where people take a product and then maybe on a Friday night have a few beers and a curry? Well, yes, it does, because people who take the product seem to eat less, they snack less and have fewer meals, and they all seem to lose between £2 to £3 per week. So it's a good product commercially in terms of consumer feedback, and look at our website and you'll see the 4 and 5-star reviews, but it's also a good product scientifically. As we go forward, we extend the range as we started to do from just weight management products into everyday applications like bread, like porridges, like muesli, and we're creating a whole range of health and well-being snacks. So these are the Snack Smart and Snack Wise brands internationally. And again, as we grow, we'll see more and more listings in national and international retailers as our brand builds a reputation across the world. This is just a publication which you can look up yourself, which is just one of the publications that we have on SlimBiome, which shows what I said earlier, reductions in weight, reductions in BMI, reductions in cravings for sweet and savoury foods, no side effects, and a good impact on the on gut health. If we then move on to LPLDL, so remember this is our probiotics, it's a live organism. This is a study carried out, and all these studies are carried out independent of us, so carried out by universities. This study carried out by Reading University, and again, this showed that we got a good reduction in total cholesterol, reduction in bad cholesterol, which is called LDL cholesterol. We got an increase in the HDL cholesterol, and we also lowered blood pressure. again, good deal flow. And what we're just trying to do now, we're trying to take our LPLDL into other product areas. That would include dairy applications, but also increasingly got interest from pharma, not just to sell the product as a supplement, but to sell the product as a biotherapeutic. So we've got one deal in terms of a product for a biotherapeutic, and one of our partners, Seed, as I mentioned earlier, have got investigational new drug approval to take LPLDL in one of their products forward for IBS. So some really exciting times with LPLDL. And again, as we go further forward, we increase our presence in both food and dairy products, and also extend our presence into retail and our US presence. And as I touched on earlier, we'll expand our core biome portfolio, not just from cholesterol, but into blood pressure and also into vascular health. So again, quite an exciting area of science and doing very, very well. And again, look at our website and see the comments from purchasers of this particular product. And this is just the study. You can look up yourself, and that just tells you what I've said earlier, but you can look at that study separately. What I want to do now, just as I finish off the presentation, is just pull together all that I've told you. And when you look at a company, you've got to look at a couple of aspects, really, the commercial and the scientific. I'll go for the commercial first of all, so you get a sense of where we are. And this just re-emphasizes some of the points I was making earlier. So you've got rapid year-on-year deal growth, so more and more deals as we go forward. You've got rapid geographic growth, so spread to more and more countries. And more importantly, it's leading to rapid revenue growth. Okay, in some of our divisions, we're 1,309% in prebiotics. Our probiotics division increased by 477%. We compare the first half of 2019 to 2020. So rapid growth in those areas. We're also getting more and more deals with bigger partners. And as I touched on earlier, we're starting now to see a number of partners, the major drug companies, starting to get involved and start to fund us, both in terms of moving from a supplement to a drug biotherapeutic. And as you've got the second generation products coming through, like Biotix, we've got a nice deal with that again, which means that the partner will invest in the development of that particular product, and they'll pay for those costs, which is substantive costs, and along the way they'll pay us milestones and some substantive royalties. So really quite exciting. And you can see it's exciting because over the last couple of years, new board directors invested over £500,000 in the company. So some good investment from existing and new board directors. And you can see another quite interesting point, if you look at some of the deal flow, you've got a lot more of our partners coming back now and saying, well, we've got a deal for this. Can we also have a deal for other products? So can we expand our territories? And that should really reassure investors that our existing partners are confident of our science, of our studies, and of our products, because they want more of our products. On the science side, very much a science-backed company. We say better science, better health, so our science is important to us. That gives us product differentiation. A lot of these products are sold by market differentiation, just by marketing. What we want to do is create market differentiation by having something new, by having some good science, and our products being protected by patents and trademarks. So lots of studies, as I touched on earlier, on cravings and hunger. One study on glycemic response, which looks quite interesting. So you get a reduced glycemic response when you take in Slim Biome, which means it levels out the peaks and troughs if you take a high sugar product. That probably has the effect of impact upon cravings. You've got the CE mark. LPLDL has grown quite quickly with a number of scientific and human studies, 3 of each. We've got the FDA authorization and for investigation new drug. And we've got lots of case studies on Biotix, which is attracting a lot of interest. So we're in a good position, both scientifically and commercially. And so what does that mean for investors? So I'm an investor myself. I try to look at markets, which are new markets, which are growing markets. And that's certainly the case in terms of the microbiome. That's seen as healthcare's most promising lucrative frontier. So a very, very exciting market. So they're quite an early stage of its development. So if you get in early, you've got a big chance of taking more of that particular opportunity. And that's probably invested quite heavily in our IP. So it is really a hot area of healthcare innovation. But as I said earlier, it's not just the science people invest in, it's the health benefit. So we've chosen those diseases where there's a real problem in terms of morbidity and mortality, obesity, diabetes, and heart disease. And probably even more importantly, existing treatments aren't great. Now they're there. So statins work really, really well, but there's an issue in terms of compliance. And so if we can create something where compliance is far higher and it works as well, I think we've got a big opportunity, and we're on the way to demonstrate that. And so these are really big markets, which and they're growing trends. A lot of these are mega trends in terms of, the microbiome, in terms of fiber. These are really mega trends. We're in a right position really in terms of the market going forward. We're not in a market that's decaying. And we are at a market that is growing quickly. We have these first generation products which have got proven science, they've got human studies, and they've got a big network of dealers around the world, and the growing brand and presence. And as I said earlier, quite a lot of awards. And now we've built this value chain in terms of manufacturers, formulators, and distributors. It's easier to fit in other products into that value chain, and we're seeing more and more of that as we go forward, and that will lead to more and more sales. And now we're at the cusp of commercializing our second generation products. This is the Sizzle, which are really, really exciting. And we've got a number of deals in this area, and they're starting to come through. So again, we've got some really good substantive first generation products and some really exciting second generation products coming through. And just to finish off, really, we're in a strong position financially. We're a good balance sheet. You've got some good deal flow. You've got lots of commercial agreements, both for our first and increasingly for our second generation products. And we've got growing revenues against reducing cost base. So as an investor looking at this, seeing a big market opportunity, seeing some good science which is proven, seeing some big deal flow, and seeing a rapid growth in sales, which is accelerating year on year, I think this is a great opportunity. And I hope you all join me on our journey. Thanks very much.
Many thanks, Stephen. Big congrats as well on the first half and all the partnership deals. What sort of triggered that increase in new partnerships over the last sort of like 6 to 12 months? I mean, obviously, if there's been the backdrop of COVID, has that been the sort of catalyst, or is it really just a culmination of a lot of good things which have happened over the last 3 to 5 years in terms of setting up the sort of the patents and commercializing it and the brands, etc. So what sort of like brought about this sort of like, vast increase in the number of, very good increase in the number of sales and partnerships?
Well, I think there's a multiple range of reasons. The first reason is hard work. I think the second reason is that, as I touched on in the presentation, we brought in a number of really good guys. So we brought in Dr. Fred Narble, who runs the prebiotic division, and you saw the growth in that particular division over the last year or so, over 1,000%. And also Mikkel Van Hansen is doing really well on the probiotic side. But I think also it reflects where we are as a company. When you create what we're creating is quite new, and we're going into a environment, going into an industry that normally sells on marketing, and we're bringing a very different approach. We're bringing a lot of science, a lot of clinical studies, some really innovative and creative products. And it takes a little bit of time for people to really get to accept those particular products, and because it's a step change from what's out there. And as you build that confidence, as you build the brand, as you start to get the bigger deals with bigger partners, people get reassured. So we tend to get more deals, and as I touched on in the presentation, more deals with bigger partners, and you'll see that going forward in the next 12 months.
And there's been a sort of like a better now sort of market acceptance of sort of prebiotics and probiotics. I remember sort of 10, 20 years ago, I think it was Danone with their Activia and Acmel, which sort of came to market with yogurts, and I think people were sort of drinking it by the sort of the gallon every single day to reduce cholesterol levels, and they perhaps got a bit sort of skeptical by the healthcare claims. Is this your products, etc.? Are they the next sort of generation that give more functional benefits to users, and hence that's now become a greater awareness at the consumer side, and therefore you're getting a lot more partnerships who actually want to bring new, more improved products to market?
I think that's a great summary. I think you should answer the questions for me. I think initially, in terms of probiotics, which is your example in terms of the known, they were created really for general health. And what's happened over the last few years, particularly with the science behind the microbiome, people started to understand that you can impact on the microbiome and in doing so impact on various areas of health. And there's two ways of doing that. One is probiotics that add bacteria. And we spent years screening different bacteria, 4,000 different bacterial strains to identify our strain, LPLDL, that could reduce cholesterol. And we understand the mechanism in terms of how it works, and in terms of it has an enzyme called phosphatidylase that breaks down bile acids. And we'll spend a lot of time looking to make sure it can survive in the gut. We could produce it at large amount at quite a low cost, and it would survive over a period of time, so it was stable in a tablet or in a capsule. So things have moved on from those particular days. And the second way you can change the microbiome is a little bit more subtle. It's a bit like you might use weed and feed in your garden, whereby you give the you take in an ingredient, and that ingredient can change the microbes in your gut, because they'll utilize that particular substrate, a prebiotic, in doing so grow better than other bacteria. And what we've done really well, where we have got some. Go on, Paul. Sorry.
Who would be your sort of like your prime competitors? I mean, if you turn the clock back and you've got the likes of Danone, but you even have people like Unilever who used to make sort of like Flora to reduce cholesterol, and then you've got, I don't know, Slim Fast, and you've got Weight Watchers on the sort of the, you know, not really appetite suppressants, but sort of they were real first generation raw and rough agreements. But these are massive markets. I mean, I saw a statistic that even just sort of like, you know, probiotic yogurts is a $4 billion market, and likewise with sort of like, you know, Weight Watchers. But these guys don't seem to be your direct competitors because they don't give the level and the scale of benefits. Who would you say is your competitor? And is this existing market really right now to be sort of like penetrated by better performing sort of food ingredients?
So I used to work for a very large corporate, 3M Healthcare, and they are great in terms of delivering on existing technology. But in doing so, they build a whole range of infrastructure based around existing technology. That's why, for example, if you take the car industry, always a good metaphor, it's taken a long time to get electric cars into the car industry, because, of course, there's a big infrastructure based around petrol and diesel cars and supply. So if you take those and these companies you mentioned, Slim Fast and others in the weight management market, it is a big market, but they're using old technology, which meant that what you're doing essentially is taking a different powdered substrate as a drink, and in doing so you're reducing the calories. Now, if you look at the data on those sort of...
It tasted terrible as well.
Yeah, so to be fair, they have improved. But if you take those particular products, what they're designed to do is help you lose weight quickly. But most people, and this goes across the range, put on weight afterwards. And so what they're doing, you can't sustain that weight loss because you're reducing your calories by taking a different type of product, which is calorie restricted. What our product is doing, whether it's LPLDL or Slim Biome, but I'll take the example of Slim Biome, it's functional. So it helps you to change what you eat and how much you eat. And you're doing so, and while you're doing so, you don't feel hungry. And that's a very different concept altogether. And so going back to the point you made earlier, the question you asked earlier about the number of companies and deals that we have, what we found over the last year or two is that more and more companies are starting to understand that the market needs to change. You need to go to electric cars rather than petrol and diesel cars, because that particular technology is old and is fading. You know, some of these big corporates, they're around, they'd still be using VHS in terms of a recording device. So you have to move on. Unless you move on, you don't succeed in this environment. And that's what we've done. So we are certainly next generation, bringing functionality and helping people to help themselves in terms of weight management. And if you take the our probiotic, our cholesterol reducing probiotic, to be fair, statins work really, really well. Okay, they are a very good product, and we don't sell our product as a drug, although some of our partners are looking at that and taking that forward. But it works very well. You know, we got reductions of 40% in terms of cholesterol. The issue with statins is that it's non-compliance. People who take them have a whole range of problems in terms of muscle aches, sometimes loss of memory, a whole range of problems. That means that after a year to 18 months, about half the people who take statins don't take them any longer or have got a much reduced dose. So what we try to do strategically is identify those global problems, those big global markets, as you touched on, and bring something different. And as you point out, it takes a little bit of time to get acceptance, but once you do, take the scalable business model, it will grow very, very quickly, and that's what we're seeing.
And presumably the statins, they're prescribed drugs anyway. I mean, your ingredients, or essentially the probiotics, I mean, they're over the counter, aren't they? So the consumer can actually buy them themselves rather than have to go to a doctor for a prescription.
Yeah, absolutely. So statins are prescribed, and as I say, they work. So I wouldn't want to recommend that people move from statins to our particular product, although I know a lot of people have done that. And but you can buy them over the counter. And if you look at our publications, if you look probably even more importantly at the customer feedback on our website from people who are using the product, typically people reduce their cholesterol by 30-40%, that's their total cholesterol, and reduce their LDL cholesterol, that's the bad cholesterol, by around about 10 to 15, sometimes 20%. So they work, and the science shows they work, and the consumer feedback shows that they work. And
so if investors want to actually try these out themselves and kick the tires, and they have to go to Holland & Barrett, the local store, and sort of like pick some up, I don't know, a bar or a sachet or something like that. Is it as easy as that to buy?
Yeah, it's even easier than that. We can go to our website. So what we've got an Optibiotix online website, which has a range of products that they can try themselves. So the idea behind that is, if you're selling ingredients, say for example SlimBiome, if you can show that you can prepare it in a range of different products, so you can prepare it as a meal replacement, as a bar, as a muesli, as a porridge, as a gummy. So we've got these gummies, and people try them out and use it and see they can help them lose weight. And it's very useful for us to present those to partners. So you can go to our website and try them out. And I also have an investor code that I share on a regular basis through various blogs, where people, if they try them out, they can get a discount, typically between 20 and 25% discount for people trying them for the first time. So we're happy for people to try our products, because the more people who try our products, the more people benefit from the science and what they do in terms of reducing cholesterol, helping people lose weight, and the bigger will be our sales.
And how much do you actually need to eat of these products to get the benefits, say, of the cholesterol of 36% decrease?
Yeah, so if you take our LPLDL, our probiotic, we sell it as a capsule or a tablet. And increasingly in some parts of the world, in a sachet, and we incorporate it into a capsule. It's about 0.1 of a gram, so it's a very small amount. So going back to the point you're making over some of the styles and sterols, where you need 3 to 5 grams of that in a pot of margarine. You need to have 25 grams of margarine before you get any effect. It's a very small amount of ingredients that have an effect. Yeah, so you've got to eat a pot of margarine to actually get an effect. But look, these are good products, and it's not just us saying this. It's the industry awards. it's the science awards, but increasingly, and this is an important point, our partners are coming back and saying to us, look, we've taken this particular product, can we take more of your products, and can we extend our products, what you've given us, into other markets? So you see that more and more. So out of those deals that we've shared with you, certainly over the last year or so, there's 4 or 5 that are existing partners that have come back and wanted more products and more territories. And that's a good sign for investors.
And how many sort of portions do you have to eat of this a day, or take of a sachet or a tablet? Is it one a day? Is it a daily sort of dose?
Yeah, let's separate into 2 products. So in terms of our probiotic LPLDL, which is cholesterol, it's 1 tablet or 1 capsule per day. In terms of Slim Biome, which is our weight management ingredient, you normally need, it depends how much weight you're trying to lose, but 2 or 3 sachets or components per day. Typically what tends to happen, so I don't need to lose weight, but certainly what happens after Christmas, I put on a few pounds. So I'll just take a bar or maybe a shake in the morning, and then that will start to reduce my desire for the sweet and savoury food, particularly chocolates I quite like. Then you can reduce your weight gradually and sustain your weight. But typically,
how much do they cost? How much would a sort of bar cost, or a portion of the sort of weight management? Would it be a tenner a shot or something like that? Or
oh, no. So if you go to our website, you'll see, for example, that our probiotics, our Biome X3, is around about £20 to £23 per, depends on the offers at this moment in time, for a month's supply. If you then look at our Slim Biome, similar sort of thing for a pack of 30 bars, or typically a month's supply. And also, increasingly, as you touched on, we're getting our products being sold in major retailers like Holland & Barrett. So they can go there and buy a similar product, but branded by a retailer direct from Holland & Barrett. So, it's good products and selling well.
And would this be interesting to the likes of the big FMCG guys? I mean, GSK, for instance, in sort of like, functional foods and clean label, likewise a Unilever, Danone, P&G, all these major brands, because, I mean, they've obviously got quite a big defensive position to protect, and to get sort of like this type of product into their portfolio, presumably would help them do that.
Yeah, so there's a couple of things. So I used to, as I touched on earlier, be a senior director for 3M Healthcare. As global director of healthcare, and part of that particular process, I would look at technology in companies like ours. And there's a couple of things that you need before you really show interest. You want to make sure that if you take this decision, that much of the risk is reduced. And that's really where we are now. So if you like, we reduced our development risk, so the science is proven. We reduced our manufacturing risk because we've got to be manufactured in many places around the world, and you reduce your commercial risk because you have a product that's being sold at many places around the world. The other thing that you need, you tend to have a higher level of substantiation that you require than maybe some of the smaller companies. So typically you'd need 2 or 3 human studies, and that's where we are now. That's why rather than just have 1 study that proves it, we have 2 or 3 studies in terms of human studies, and then 2 or 3 scientific studies. And the final thing that's always important to a large corporate is, do you have a brand presence? I keep on mentioning this to investors, but the brand is really important because it takes a lot of money, a lot of time to build up a brand. But if you've got a product like ours, whether it's LPLDL or it's Slim Biome, and we insist that our brand, our Intel inside, if you like, our Slim Biome LPLDL is on all the products that are being sold around the world, you build that brand and presence. That's really attractive to a commercial partner, a large commercial partner. If you then back that up with all that I described earlier in terms of the IP, the double IP in terms of patents and trademarks, and particularly where you have the patents, as I described, as overlapping patents, so more than 1 patent, so a family of patents that overlap, which protects your commercial interest, that becomes a very compelling reason to either acquire or make an investment in a company like ours. And certainly over the last year or 2, we've had a number of approaches from some of these larger partners.
And how do you sort of like enhance the brand marketing of sort of like the Slim Biome, for instance? I mean, do you use key endorsers, or do you use social media? Or, I mean, obviously you don't want to go, it isn't advertising because it's more of a B2B sale rather than the B2C sales. But if you're going to get demand pull and you want consumers actually to choose products actually incorporating Slim Biome, for instance, then maybe that is a case. How are you sort of visualizing that going forward?
So you have to separate the B2B marketing from the B2C marketing. So most of our work is B2B, so that's our focus. And so most of our work is in going to events, industry events, doing presentations around the world at international scientific events, or increasingly we have our partners, our academic partners, who present for us because they've carried out the human study and they're happy to present, and that gives an independence to it and gives a greater credibility. If you've got a range of professors from around the world talking about your product and saying it works, it's got far more credibility than me standing up and saying, well, it works. And they're going to say, well, of course you're going to say that because it's your company. So that's our focus. And then our partners, and if you look at what Holden and Barrett have done, for example, they put a lot of money and time into marketing within the UK. And then if you go to our other partners, so for example, OPTI in Australia and New Zealand, they're spending an awful lot of time and money marketing products across Australia and New Zealand with TV adverts, radio shows, etc. So all that marketing, remember, marketing is costly, is really being driven by our partners. That means we can build this company, going back to what I said earlier, to the scalable model, build the science, build the human studies, work with the right partners, they invest in the marketing, our costs in development go down, our sales go up, and we get to that tipping point we're at now, as I showed in the presentation, where it's looking very, very good for the future.
You wouldn't consider sort of giving a few free boxes to Kim Kardashian on social media to sort of like try out and then endorse on Twitter or LinkedIn or wherever she is, Instagram?
Look, there's different ways of doing it. If you want to sell your products on the basis of endorsement by celebrities, and that's one approach. We don't do that because we're B2B, and just to be, there is always a risk as well, because sometimes, as we've seen in the past with celebrities, they can fall from grace pretty quickly. So we don't take that particular route. And typically,
just
if you give them a box, if you give them a box, you want 30 grand to go with it, and we don't take that approach. We're B2B.
Yeah, it was just interesting, your analogy with Intel Inside, because if you look at that brand, they did a lot of sort of like, consumer demand pull marketing, and likewise with the NutraSweet and other sort of food ingredients that have got effectively their own brand. If Slim Biome wanted to go down that route and be as big as the actual product almost, that it was the microbiome intelligence inside products that were actually powering it. But you're right, it costs a lot of money for the businesses.
It does. Yeah, so typically for those sort of, if you look at those sort of schemes, it costs us over £1 to £1.5 million per year for each of our brands. And that's why we work through partners, so they put the money in.
Yeah, just sort of sizing this, you've got what, 70, 80 partners currently at the moment doing half year, was it 700, 800,000 revenue? What sort of like numbers are you thinking of in terms of the opportunity with some of your larger partners? Is it £1 million plus in sort of annualized revenues going forward? I mean, you've got some huge billion-dollar businesses here.
Yeah, so typically, if you're, go back to the point when I was with 3M, you wouldn't really get involved with a company, a $1 billion business yourself, unless you thought they could reach a, really big sales. And typically they'd see £1 million sales as a cutoff. And it could be even as high as 10. That's their sales rather than our sales. So they'd be looking for between 1 and maybe 50 million in terms of their product sales. So what I've said to the market is that in terms of our partners, you can break them down really into 3 categories. There's the smaller companies that will be doing 0 to 250k per year. That's to us. It will be those other partners who will do somewhere between 250 and maybe 750, and others that will be 750 plus, and typically million, 1.5. Now, again, just to be absolutely clear, you don't get that immediately. What partners will do, and you've seen that again using the car metaphor with the car market with electric vehicles. People take it, they try it out, it works, and then they build upon that, and they build, as I touched on earlier, they build their territories and they build a number of products. So we're just at that stage where we've only launched our products just over 2.5 years or so ago. 2 partners in terms of B2B, they've taken them to their partners who then say, well, hang on a second, this is really good. Can we have it in a mango flavour because it's the Indian market? Can we have it in a different shape? And then you've got to do your stability studies for that particular market. And then they test them out with their distributors. Then they will sell a few initially, and then they'll start to get interest and sell more. So you build them up. So typically it will take 2 to 3 years to get that to that particular peak point where they're making pretty good sales, sometimes longer in some markets. So the South American market always takes longer, but once you're there, you're established for many, many years. But we're on that path, and you can see, as I touched on earlier, the rate of increase in terms of our sales is pretty impressive.
And so putting all that together, sort of, I don't know, look through the crystal ball in sort of 5 years' time. How many partners would you've got 70, 80 odd at the moment, would you sort of envisage? And what sort of revenue possibility, nobody's going to hold you to it because it's impossible to say, but sort of what range of revenues would the board be sort of like thinking of in terms of, so I don't know, 2025, 2026?
So it's not the number of partners that's important, it's the right partner that's important. And as we go through the process, there will be a change in some of those partners. There will be renegotiation of contracts with some of those partners. As we get to our brand being established, you'll start to get the bigger partners coming in, and they will want exclusivity for a wider range of areas. So we might actually see less partners going forward because you get consolidation from larger partners. But I still like to have that mix of small and large because I think it gives us a degree of risk mitigation. Then if you look towards the future, and I wouldn't put a timescale on this because, if you imagine put a timescale, particularly in this current environment with COVID, where you don't know what's going to happen week to week, never mind year to year. But I could quite easily see that each of our products, whether it's Slim Biome or LPLDL, could reach sales of between 10 and 20 million over the next sort of number of years. And if that's the case, so each of those divisions then would be worth, you're looking at a 10 times multiple if you look at the industry market. So if you take a figure of 10 million and expect the value of that part of the company would be worth 100 million on the Slim Biome side and 100 million on the LPLDL side. That's notwithstanding, then we've got our second generation products coming through, our sweet Biotix, our microbiome modulators, and of course an extension of our LPLDL into those drug markets.
And the valuation multiple at sort of like, high single digits and even, 10 times sales, etc. That's driven because of the operating leverage. The more sort of like incremental sales you tip onto the top line, it just flows through to the bottom line. Because I did see you've got a really heavy head count of 10 employees. So you definitely keep
it's 6. It's actually 6 now. Yeah, it's 6. We got a few non-executive directors, but they're not employed by us. They're on contract. Yeah, so in terms of full-time employees, we've got 6. So yeah, you're right, a heavy headcount.
Heavy overhead.
But as we go, yeah, absolutely. But that's the idea. That's the model, right? If you take investors' money, you have to be careful with that money. And everything we've done is try to increase value and not spend money on non-value areas, like having big offices, like traveling first class. So we're very, very careful in terms of what we raise and what we use the money for. And so that's what we've done. We've only raised 8.3 million, that I showed you in the slide, and since the beginning of the company, and we've got a multiple of that, 5-6 times multiple, which is what we hope to achieve going forward. And if I can, and my record is at 10 to 20 times multiple, and that's what we hope to achieve as we go forward.
And so the scalability then, I mean, effectively, if you've got a fixed cost base, other than you may need, if you're developing a few more products and a few more sort of like, your third or fourth generation products, you might need a few more in R&D. But other than that, I mean, essentially it's a licensing model, and therefore it just drops straight through, doesn't it? Yeah?
Yeah, that's the idea. You put a lot of time and effort and money in initially in building your science and your human studies. That's why costs are very, very high early on in the business. And then as you get to a point where you move from having the science proven, having your partner network established globally, and then you can start to divest in terms of your research and development, decrease your and rationalize your costs in IP, and really focus on generating sales. And as you generate more sales, what you then look to do is renegotiate your supply agreements so you reduce your cost of goods. And that's why you should see, as we go forward, our sales increasing, our costs reducing, but also hopefully our margins increasing. So that's the strategy, that's the business model, as I explained in the presentation, and so far so good.
Yeah, I must admit, I think it's actually quite a well-trodden strategy. Actually, there's a company out in the States that is largely on the pharma side, but it's called Biospecifics, and I can't remember how much it's worth, but the last time I looked, it was like a 10, 15, $20 billion business, and it's got a head count of about a dozen. So this strategy does work very well for investors. So if the business can increase its market capitalization from 50 mil to 100 million or even $1 billion, then I think many investors will be absolutely delighted. Just turning the sort of the clock forward and looking at sort of third potential generation products. I mean, I sort of like I've spoken to a few sort of, I don't know, clinicians and doctors and consultants in this area, and this is the whole human microbiome is really poorly understood area about the benefits, but they're only really starting to get their head around it in terms of sort of quite sort of like nasty and chronic diseases, things like colitis, you mentioned IBS, Crohn's disease, skin conditions, and all this sort of stuff. And given you guys are in the sort of, I know you're not really in the pharma and the medical side in terms of want to spend a lot of R&D getting FDA approval and all this sort of stuff and going through large and sort of like long and protracted clinical trials, but it puts you at a sort of an advantage in a sort of like an area that's got huge untapped health benefits, even on the medical side, doesn't it? I mean, you're in a very good spot here to really sort of drive further growth down the pipe.
Exactly right. If you look at my background, what I've been quite good at spotting is ideas or concepts before they become mainstream. So one of the first companies I set up was a company called the Asset Pool, which bought and sold goods on the internet. That was before eBay and before Amazon. Okay, and I drew that up and I sold that on. The second company was a company called Acolyte Biomedica, which detected healthcare-acquired infections. So these were superbugs, and I formed that way before it became a key global issue. And I built the company up and I sold that on at roughly 40 times multiple to our sales. So what we've got here, remember, I wandered around back in 2012 speaking to investors, telling about this microbiome space, and it was very, very, very novel then. But I convinced one or two people to invest in me because I made them a lot of money in the past. And it's really growing quite quickly. We don't really know when to become mainstream, but what we do know is that in some parts of the world, particularly the US, is increasingly becoming mainstream. That people understand that a lot about gut health, a lot about the microbiome, and how having a prebiotic, a fiber prebiotic, and about using functional ingredients has a big impact upon their health. So we see a lot of growth in that particular market, both in terms of health and well-being, and in terms of our those big chronic, we chose obesity, diabetes, and cardiovascular disease not by chance. We chose them because they are big markets that have unmet need. What we did know at the time was, could we create our science and prove that they work in those markets? Now we've done that, and now it's exploiting that position in those big markets. And so we've done a lot of work in the UK, a lot of work in Europe, and now we're expanding quite quickly into the US. And you'll see a lot of interest in that area as we go forward over the next 12 months or so.
Yeah, I mean, certainly in terms of the people's digestive system, I think the leading medical treatment in this whole area to reset a human person, a human's microbiome is a feces transplant. So it isn't exactly very scientific. So yeah, if there's anything that the company can do, then I think that would be sort of like really well received. Just in terms of just in terms of sort of like listing, I know mentioned in the interims that you mentioned that you were potentially thinking about a US listing.
Yeah, so if you look at where we are in terms of our development, we are growing very quickly, and we're moving very much into those markets that have a substantive interest in the US. So if we can build a market presence in the US and attract consumer interest, then depending on what happens in terms of the presidential elections, then there'll be an opportunity to look seriously at that particular area. We've done a lot of work already, as I mentioned in the interims, in terms of structuring the company. So we reduced our shareholding in Skin Biotherapeutics such that it no longer will be seen as a sort of a part of the company. We changed our end of year, and we've got other things going on in the background, which will prepare ourselves for opportunities in international markets. And it's those markets that are, I think, will create a greater opportunity for Optibiotix to move into the next stage of its development from an AIM company worth 50 million to a company on one of those international markets worth maybe 200 million plus. So that's our aim. And there's a lot of work taking place at this moment of time on that, and we'll as we get closer to that, we'll inform the market. But I'm sure people are well aware that once you make that decision, you enter a quiet period, and so you can't see anything about that particular market at all.
Well, that strategy seemed to work very well for, I think it was a UK AIM-listed business called GW Pharmaceuticals, which re-rated 4 or 5 times upwards, and it never looked back. So I think that was, if you managed to successfully achieve a NASDAQ listing, then I think there'll be it could be potentially a big catalyst for the for the business going forward. Just in terms of,
just to pick up that one, I've analysed the last 5 years of listings, dual listings from AIM companies on NASDAQ, and there's certain things that are important. Clearly, your advisors that you work with are important, but also having a US presence in terms of your products. And it's not by chance that we've started to build a presence in the US. We've got some major partners in terms of Agripur. We've got Seed Health. We're increasingly trying to enlarge our presence in terms of the drug biotherapeutic market in the US with with deals in the past. We've got a partner working on Sweet Biotix in the US, and you'll see more of that as we go forward. So it's all part of pulling everything together in terms of the product reach, increasing the brand presence in the market, and get the timing right so the market is receptive to us as a company.
Yeah, and I think you need to be in the correct sectors, and I think you are. I think there's 2 sectors which are really hot, which is tech and healthcare. And then we've talked about GW Pharma, that massive re-rating, but the companies also, the British businesses that have decided to list solely in the US, like Mimecast in cybersecurity, for instance. I mean, you're in the right sector, so you've got the tailwind behind it. In terms of sort of like growth going forward, is it an organic growth strategy? I mean, it sounds as though I mean, your sales are obviously going through the roof, but presumably there might be some M&A opportunities if alternatively you do get a listing and the share currency increases, appreciably. Then presumably that opens the door for sort of M&A as well.
Absolutely. So we focus very much on a organic growth strategy. We have initiated a couple of M&A projects, and there were a number of interested parties that we looked at, but never really developed. Partly because this is a really exciting space, and people want to keep hold of what they've got. As we move forward and we start to grow the business and we look at listings of international markets, then we, along with that, we're certainly looking at M&A opportunities. We've always got our eyes peeled, but the key thing, I've been involved in a number of M&A activity. The key thing is getting a partner who actually complements and provides synergies of what you're doing, as opposed to distracts. So the last thing you want is to have 2 + 2 = 3, which many acquisitions sometimes amount to. You want 2 + 2 = 5 or 6, and that's the key thing, trying to get the right partner in the right area who adds real value to what you've got already, rather than detracts from your value and detracts from management time. With a team of 6, you've got to be pretty focused. But as we develop, and that's certainly an area that we've looked at in the past, we'll continue to look at for the right opportunity.
And it'd be in the technology, it'd be in the patent side, presumably. You're hitting so many distributors and partners in terms of commercializing it. You don't need any more. You don't need to vertically integrate. It's more of a sort of a deeper scientific background.
Yeah, it's looking what they bring. Do they bring a wider range of products? Do they bring a different channel, for example? It's looking at, do they bring a little bit more in terms of science? There's quite a few companies out there who are at quite an early stage, but have got unproven science. So do you want to bring those on board? But they do add an element of risk. When we've got enough going, we've got enough in the pipeline ourselves to take forward, which we know are past that risk stage in terms of development risk. So you need to focus on those. But we have, as I say, looked at a number of partners that could potentially bring in different attributes, and we'll continue to do so.
Well, brilliant, Stephen. That's absolutely, really interesting to hear. And I mean, certainly, Optibiotix is addressing massive, billion-dollar-plus markets, and with its 3 growth engines, with sales potentially in 5 years of sort of each of them sort of 10, 15 million. I mean, you don't got to be a mathematician to realise that's a sort of 40, 50, 60 million pound turnover business on a high single-digit or even double-digit sales multiple. Then you could see a significant increase in the shares. And on a personal, I think on a medical front, I think there's a lot of benefits that investors and patients could get in terms of looking at the microbiome and improving it in terms of all the the weight management and the diabetes. So we all hope that you are extremely successful, both as an investment perspective, but equally on a medical perspective as well. So thanks very much for your time, and look forward in touching base again in the next sort of 3 or 4 months.
Thanks, Paul. Have a good day.